Everything has a cycle. Catch things on the early part of the cycle. Go through it. The trend is your friend for a little bit. Just because everybody else is doing it doesn't mean it's bad. It's if they've been doing it for a long time and you get in on the tail end.
If it does drop, and maybe it does, it's going to be a feeding frenzy. Prices are going to skyrocket again. We just saw that.
There's so many questions about what to do. Where should I invest? What should I jump into? If you just look at basic supply and demand, it really will guide you a lot.
Here we go.
Welcome to Inside the Hive with Kyle and Brandon. Join us as we explore business, real estate, current events, and personal growth. We dive into the latest trends, offer valuable insight, and share stories. Thanks for tuning in. Sit back, relax, and enjoy the show.
So hello, everyone. I'm Kyle Gorman. This is my co-host, Brandon. Today we have another episode. Today we have another episode of Inside the Hive. And we're having a good topic today.
Yeah.
Retail versus multifamily and office.
This question comes up often. Multifamily's been on a pretty crazy run. So
yeah,
I click on a lot of these IG ads, and that seems to be all anyone's doing. Let's raise money to go buy multifamily properties. And it's been on a tear since pretty much the Great Recession.
Exactly. We have a lot of fun stuff in store for today. We have some questions from the audience, people that mailed stuff in, which is very cool. Nice. We have some current events that we wanted to discuss. We got the 2024 Olympics just started, which is cool. We got a bunch of fun stuff, but might as well dive into the retail versus the multifamily and office, which I don't know if office is part of the fucking conversation anymore, man. It's so dead that I don't know if that's even a thing. But first off, what is your take on the different asset classes and what people should be doing?
Let's focus on those three. I like them. Those are popular right now. Obviously, industrial is doing good and stuff, but we're in commercial real estate, we're in retail, but we loved apartments for a long time. The multifamily sector, we saw rents were just on a tear from, let's call it 2012, 13, all the way through, even through the pandemic, really.
Yeah.
Until really just recently. But there's no way that things can kind of go on that tear for, everything's cyclical. And it's like that runway was ending at some point. It looks like it's just slowing down. It's not, we're not in some crazy recession that we know of. I mean, there's some indicators showing that, but multifamily did well. And I think it's just kind of run its course a little bit. And it's time for another sector to rise up. I've always loved office. I always thought it was a sexy real estate class. Yeah. It just looking at the building, I'm from the construction world, and I just like the way they're built, and they're sturdy and concrete and glass, and they're great. And it was a place where you go in and you make money. I always thought that was like a pure business to business. You're not dealing with residents. You're dealing with people that are signing leases, long-term leases, hopefully, to go in and do business and make money. Thought that was attractive to us. A little over our head at that time, and we needed a lot of capital. A lot of institutional guys were into that. So
to do that Class A, that higher, even the construction licenses it takes to do that type of stuff. I mean, that's some heavy hitters for sure.
Definitely.
Back to multifamily, it had its run, but to be honest, man, I didn't even like it back then. I just thought it was. I didn't like the idea of value-add multifamily sometimes of acquiring an apartment building, kicking everybody out. Having to go through that. Then when you put people back in, now you have people complaining about this could be wrong, that could be wrong. It becomes a maintenance and customer service thing. We had a developer, I remember you and I saw him years ago. John McNellis, actually. Shout out to John if he ever listens to this, but he's a very accomplished developer in California. Mm-hmm. Does a lot of grocery anchor shopping centers. And if you read his books, he talks about he started like a townhouse or something like that.
That's a great way to get started. I think people comprehend it.
Yeah.
People can understand it.
Exactly. And he said after that, he would never develop something that was a roof over where someone sleeps again the rest of his life.
Yeah, I remember this we watched him speak about his book or something. It's like a ULI meeting or something. Yeah, I remember this. And I understand what he's talking about. I mean, it's easier to like underwrite those type of deals, but it's just dealing with people that they sleep. It's close to home.
Yeah, I think if someone's going to jump into this for the very first time, there's a lot of options, but understand what you like as a person. Do you like dealing with hospitality and people, and you're a people person, and you love that type of thing, shit, man, get into Airbnbs or something like that. Get into bed and breakfast. Get into that is really, you're in there. A little bit hands off, but more of that. We get higher management, maybe arm distance. That's your multifamily, your apartment complexes. Now they're so compressed; those cap rates are in 4s or less, and I don't know how anybody's buying those right now.
Just parking their money somewhere, I guess.
But it's less than a high interest bearing
high
savings.
Expenses and high turnover, and constant turnover, whether it's months or a year.
You know what I also thought was bullshit about it, man? It was like I didn't like how they were underwritten. I didn't like how if you have people like some of these gurus, and you got like Cardone and stuff, and they'll say like, we'll take the NOI. Now just assume 50% expenses, and take the revenue. Now assume 50% expenses, and there's your NOI. And it's like, the hell are you guys getting this 50%? Where did this even come from? It's just like this big gross estimate. And they were like, well, we assume we can kind of bring it down. There was nothing really exact about it. And it was just kind of this ballpark type of thing. And people would pull the trigger. And if you did one 5, 6, 7 years ago, I mean, you made a killing.
And as it was going up, they could make these kind of crazy projections and they probably wouldn't lose. Right? And that was kind of that run that it was on. Or kind of, I think it's a little over, but that's exactly how they were doing it. And then they were projecting out these crazy rents too. Yeah. Can you really get that? Well, yeah. We put a gym, we put a pool, and they were getting them.
Well, and so now
they were getting proven right.
And now I was one naysaying that, and I got to put my foot in my mouth a little bit, or eat crow, or whatever that saying is, because now the rent in Southern California is so high. It is insane. You're talking about over $3,000 for like a 1-bedroom. It is crazy. Yeah. So the rents they were projecting came to life plus some, and they so it was a solid asset class. If you missed the wave, you missed the boat on that one,
maybe it'll be back one day. I don't know.
It will. Everything in real estate is cyclical. Yeah. So that's how it is. Even how the things are developed, you build these giant housing tracts, and you're going to build the retail to support the housing tracts. Before the housing tracts come, you need jobs, which could be industrial or office space. And it goes in these big cycles. Then you're looking at schools, and then you're looking at hospitals, and then you're peppering other. It's like how it works. Yeah. Same thing with value add classes about buying existing assets. And you're going to buy an existing asset and then hopefully add some value and sell it. Yeah. Is there a market for that? And everything changes. Yeah. We've seen it all. So multifamily, industrial had a big boom for ground up. Arizona, California, other places.
I think they're still on a tear. They're just,
are they?
A couple of these sectors are just decelerating. So they're not seeing the rent growth that they were maybe projected out. I mean, you had construction costs rising, and then interest rates. And that's where I saw multifamily get into some trouble, was when the interest rates went up and these guys were on these variable rate loans. They had it all underwritten. These are the rents I'm going to get. Maybe they're getting the rents, but construction costs and their holding costs just went through the roof. Yeah. And now they're stuck. I mean, I was talking to the Wisconsin School of Business. They have a cool real estate program. We're looking at one of our properties.
Yeah, for sure.
They had invested in a couple of these deals. These were long value add timelines. So they had construction loans. They were doing some heavy renovation, even a ground up one. And they got caught in that interest rate environment where they had projected out to refinance at a certain point at stabilization, whatever that was, 4% or something. And now it's like 6.5 or 7, and they're stuck. And they're having to go out there and re-raise capital to try to finish the project. They can't even finish it, or they can't finish the renovations enough to get the rents where they need them. And so they're in this weird spot. So that was just
that's a tough spot.
Kind of you're stuck in the economic environment too, which is unfortunate, and that happens. But I like what Warren Buffett said. Everyone, where you get caught with your pants down when the tide goes out or something. Yeah,
you see who has their pants down when the tide goes out. Yeah.
I think that's a scenario of that.
People are over leveraged.
They're way over leveraged. Like projections were way out of control. So,
well, tell me a little bit more about that. Then, are these indicators of the economy as a whole and how you think things are going to go in the trajectory? Like of what the entire economy? I know you listen to Bloomberg on your way to work every day.
Yeah. I think at this point, I think we are seeing that curve, interest rates. So I'm just thinking of that starting to tick. I mean, we're starting to see indicators of hopefully it's going down. I mean, we've gotten a lot of interesting reports even this last week, and the jobs and all this stuff. So there's so many different metrics. I was reading some other guys that is ticking up. I wish I could quote him. I should write all this down, but no, I think we're maybe through the thick of that, but I think we're going to be in this rate environment for a while. So I think we're just going to kind of hold steady. You're not going to see the growth that we saw over the last decade. I just don't see how that's even possible. It got way overheated. We pumped in way too much money into the economy. But
I don't think interest rates are going to go down for quite a while. It's going to be quite a few years, in my opinion.
Be careful.
Yeah. And I think people that are sitting on the sidelines to buy homes right now because they want interest rates to go down, I wouldn't suggest that. This has been talked about a lot for the last year, so it's not anything new. I'm sure everybody's aware of this by now.
Yeah.
But if you do the math, and you don't want to be sitting on the sidelines right now because appreciation is still happening, and you're going to save a point or two on your interest. I mean, go refinance in a couple of years or something.
Get in, because when if it does drop, and maybe it does, it's going to be a feeding frenzy.
Yeah.
Prices are going to skyrocket again. We just saw that.
Exactly.
It's going to cycle right back through that, just like the pandemic had happened.
Yeah. And there's deals out there, no matter the interest rates. I mean, we have a hell of an interest rate on retail we just bought in PV, and I'm not happy about it, but the deal still pencils and it still works. And a lot of things, I was just doing, there was a little Twitter thing that I was doing, or X now, as we call it, but about should you sit on the sidelines when it comes to certain states' taxes and the economy, things like that. People were debating a little bit about California, and they don't like California's politics. They don't like California's taxes and I completely understand that.
Yeah.
But the deals and the money that can be made in this state with real estate is through the roof. So it's like, you got to sit on the sidelines because you got to pay a 10% tax or something like that. Ever heard of a 1031 exchange rolling it? I mean, It doesn't make a lot of sense to me about just because interest rates are high. There are deals somewhere.
Always. In every economy. Like there's deals. If anything, too, there's less competition right now.
Yeah.
So because people are afraid of that. And you do need to weigh the storm out a little bit. You're going to kind of eat it for a couple of years. We don't know exactly, but if you want to get in the game. Otherwise, you're outside looking in, and now there's a feeding frenzy when things do normalize, or whatever people think is normal nowadays.
Yeah. Lower
interest rates. Oh, I can afford the payment now. And I know there's a lot of that too. I mean, can you afford it or not? But if you can, probably jump in. Definitely, you get at the table, there's a negotiation to happen.
Yeah.
If they're motivated to sell, you're motivated to buy.
Yeah.
What you're looking at on the surface or on that listing may not be what's reality when you actually sit down at the table and start talking.
Oh, 100%. And there's creative ways to finance deals. There's so many different programs. There's so many different things. There's seller financing is huge. And that's something that if they carry the paper, who cares about these interest rates? I mean, you might get something for 4% if you make a deal. There's ways to be creative. And the friends that we know that are doing this, they're still moving forward. People are still doing deals all over the place.
Yeah.
They're shifting though. There's a pivot. And sometimes when it comes to development or real estate investment, you have to have that pivot. I'll give you a couple examples. We can touch on each of them. But for a few years, everybody's been talking about short-term rentals. Airbnb, the other one with the V, whatever the fucking that thing's called. But it was all those short-term rentals. BRB, that thing.
Or something. Yeah.
So everybody jumped on that bandwagon. Yeah. Then cities started catching up, and cities started outlawing it, and there was all these restrictions, and then only so many, and then people got really good at it. So now you're competing with people that are almost like professional hospitality. Go to Scottsdale, and a bachelorette party looks like, these things are like dialed in.
Yeah.
And some people started getting pushed out. They lost their money. They bought something underwriting it as if it was a short-term rental, how much it was going to income, and then they couldn't do it. And they lost.
City denied.
Lost it
all over the world too. I read Barcelona where it literally denied all short-term rentals.
Yeah, exactly.
That's scary. It's so people that literally have bought these properties with the hopes of this thing's booked out. And people that do that, they're being successful. They're like, I'm booked out for a year. I had no issues. And I have a friend that owns one up in northern Arizona. He's like, I'm booked out solid for a year. I have to carve time out so I can go to my own house and go check it out. But
I got a buddy too in San Diego, and he owns a luxury one that sleeps like 30. A guy things like 8,000 square feet. Things crushing it for him.
Yeah.
But he was smart and he made a shift. He saw this coming, and now he's into boutique hotels and things like that. But I guess my point of everything is multifamily was hot. Someone's making a shift. office killed it for a long time until the pandemic. People started working from home. They didn't come back. Companies just pulled out, lost their leases, weren't paying. Now these things are sitting, what are they, 70% vacant, some of these high rises? People were they're being sold for 30 cents on the dollar, and they're still not getting picked up. Like, you can't pick a $100 million building at one point is now going for 30 million, and these developers can't seem to make it pencil to turn it, even to transform it into multifamily, to transform it into something else.
That's difficult.
They can't do it.
If you've got a 10, 15-year outlook and you've got the money, you can get a heck of a steal right now. I've been seeing some guys do that, but they've got some institutional capital and they're looking at that decade-long return.
That horizon.
Not everybody has that luxury. But, that things may turn around, but any deal is a good deal if you get it at the right price, right?
Yeah.
And they are getting stuff well below replacement cost.
Yeah.
And they can stomach a 10, 12-year turnaround. Well, maybe there is something that's unfortunately just not a lot of development companies that need to do deals and do projects and see kind of returns quicker.
Yeah. So office kind of out. We got multifamily cap rates are compressed. If you got multifamily, hold on to it. It's probably cash flowing for you or something. I mean, but it's like, that's a hard one to jump into. Tons of competition. Short-term rental, I wouldn't suggest that. So what are we left with? What are like the hot ticket items right now for real estate investors to?
It seems to be the bastard stepchild that nobody liked ever. They've been bashing it for a decade.
Yeah.
This is what the headlines say, right?
Yeah.
The retail sector of all these giant retailers going out of business and restaurants are shuttering and no one wants to go. And there's definitely that happening. It's changing. But it is a sector that we chose.
Yeah. Yeah, we
went all in on this. So.
I feel like we had a little foresight. There was about that one, because when people take retail, I feel like they are grouping it all together. And I think that is a misconception. When retail's shuttering, or things are Amazon shutting down retail, or people are going to Amazon instead, or these anything online, shopping online, and now retail's being destroyed. That is true in certain cases when it comes to like a product or clothing or certain things like that, but not for services and experiences. So if you had a retail center, and before, 15 years ago, you're going to see a clothing store, a shoe store, this like that. And now Amazon and online shopping is kind of like, it has shuttered that a little. It has hurt that a little bit.
Made changes.
But now what has been replaced? Now you have the fitness things, the Orange Theories and the Pilates, and you have coffee shops and restaurants and small things. And now restaurants are taking smaller footprints. So we used to see restaurants taking 2,000, 3,000 small, like grab and go restaurants up to, bigger 5,000, 6,000. Now we were doing restaurants, some CM work for restaurants, putting them in our centers. 1,200 square feet.
Yeah, 1,200 square feet is a decent sized one in California.
Yeah, what they did is these shopping center owners took these spaces, they made communal outdoor dining area. Yeah. So now these restaurants didn't need to take up square footage, having a lot of dining inside. They changed their model, a lot of grab and go, order at the counter, get your food, go sit somewhere else. And they're just like little machines pumping things out. And these centers are now thriving.
Yeah. Yeah. And Amazon, no doubt, has changed the landscape of retail. But they're also seeing a lot of studies and surveys coming out where people still want to, minus the experience, you got to go out to eat and you want to meet your friends, but they actually want to see some of that product too.
Yeah.
They want to go in. Like some people are opening, some stores are opening just kind of like showrooms. Yeah. So you can go in and touch the shirt and look at the pair of shoes in person. Like, okay, I'll order it online, or maybe they direct drop ship it to you.
Yeah.
They don't carry a lot of inventory, so they've got a smaller footprint now. They can have that 1,000 square foot kind of storefront or less even, have people come in, see the product is, okay, this is quality or it's not.
Yeah.
And then drop ship it, or you go back and order on our Amazon store. I'm seeing a lot of that. I'm seeing that at the malls. I'm seeing that in some other kind of more neighborhood centers. So there's absolutely that going on. But that goes to show that it's like not everything's done online here. People want to get out of their house. They want to go. Now, yeah,
for sure.
And the whole side of it with the whole pandemic and the pent up demand of people not being able to see people, not being able to go out to eat, not being able to grab a cup of coffee.
Pent up demand, man.
I mean, that's where I think the retail is kind of on the upswing now.
Yeah.
Is a lot because of that. I mean, we really struggled during the pandemic. having to shutter. Tenants can't pay their rents. You know, they're forced to shut down. I mean, they got to switch the model of takeout. Some were stubborn, didn't want to do that.
Yeah.
Others that did were thriving, but they still struggled. I mean, there was no doubt about it. And retail, the bastard child, took kind of a big hit there. No doubt about it. I mean, it was scary times.
I remember years ago, people didn't want to touch retail for some reason. And I never understood it. I always liked the big outdoor shopping centers in California and Arizona. I always thought they were just cool. I thought they were a place you could go and like outdoor mall, strip center type of thing. But now that's kind of their heyday a little bit, and they're coming back, and you can buy something with a cap rate in those 7s. So it cash flows from day one. You can start making renovations. You can get new tenants in there and so forth, and really, increase that NOI a lot. Mm-hmm. And so you can buy something for a couple $1 million and sell it for double type of thing in a few years. And that's really what is so attractive to me about retail. Yeah. Also, the product has a shelf life. That's just something about retail. If it's built 30 years ago, it does not look so good. If it has tenants in there a long time, small business, it starts to get run down. It's like a natural cycle of retail, and it has to get money put back into it, get life breathe back into it, and become vibrant again. Mm-hmm. And then it thrives again. But it does tire. It's like one of those. Yeah. I guess that's true.
True of all of them.
For all of them, it is. Yeah. I feel like you have office buildings though around the country that have been there for 100 years or something. And I know they've been remodeled a million times, but
inside,
yeah,
timeless.
But like retail's a little bit different. Like it's gonna keep up with the trends. You got to keep up with it. Yeah, there's that maintenance. Yeah,
that's where I see the indoor mall, like that experience seems to go away. Right, that's what you read about in the headlines. That's when there's 1 million square feet of retail getting demolished, and then turned into maybe some mixed use. Maybe there's still a piece of retail there, but you got apartments, office, everything going in there. Hey, those are big plots of land, a lot of parking, a lot of land.
You know, seeing that a lot in California.
Yes, absolutely. Yeah. There's definitely that's the headlines, right? I mean, those are the big box retailers that are in there. Those are the malls that are kind of shuttering, not the local kind of smaller ones. But ultimately, because of that, I think it's a simple supply and demand equation. Mm-hmm. It's just there is no new supply of retail. And the demand is still there. Even if the demand was just steady, but the supply is going down. You now have an off-balance equation, and that's a big reason we're on the upswing.
I'm glad you brought that up, because there's such a big overview type of thing, that 30,000 foot overview of a lot of stuff. But if you get down to the basics of any sort of business or in investment, and in my opinion, it's look at the basic economics of supply and demand. And that really
everything can boil down to that.
Is there a demand for this? And when you look at vacancy and you see there's 1%, it's 2% for retail around Southern California and certain things, and you see the vacancy is so low, that should tell you something that there's a high demand. Mm-hmm. High demand means that people are willing to pay a higher price for something. That's literally just the basic.
Can't find a good place. When you do, the price is going to be up there. Demand is high, supply is low.
Yes, and so that's all. That's all it is. So I know there's so many questions about what to do. Where should I invest? What should I jump into? If you just look at basic supply and demand, it really will guide you a lot. In my opinion, we were mentioning short-term rentals earlier. It's being saturated with people. Mm-hmm. Multifamily was saturated. Now, multifamily, that does have a very low vacancy rate. Okay. So it's just hard to get into because everybody else knows it now. So they price the asset super high. Yeah. It's almost like retail hasn't caught up with that. There's a super low vacancy, but nobody's caught on. So the price is still, that cap still has some room in there where you can make a little juice in the deals. That's all it is. Then eventually it'll get compressed. Within a few years, retail will get compressed just like everything else. And we can pivot to something else.
Yeah, there are sectors inside the retail space, like a single tenant, triple net, that are super compressed. People can understand, I've got a Wendy's here that's going to be paying rent for the next 12, 15 years, let's call it 10 year plus a couple 5-year options there. Yeah. It's kind of like a bond, right? Yeah. They're buying those at 3-4 cap still to this day.
Yeah.
It's just that to me is you got park your money somewhere.
Exactly.
You've got to do a 1031
I
exchange.
think Dutch Brothers is trading like at a 3 cap or something right now.
That's crazy.
Yeah.
But they're safe. I mean, these guys are traded on Wall Street. These are credit tenants. So I understand that. I mean, there's some backing there. Like, not going out of business anytime soon. So there's a safety net there.
So when
you own a physical asset.
100%. And you mentioned safety net. So I'm assuming that means that different asset classes, different risk tolerance, right? So in your opinion, what are the riskiest types of real estate investments versus what are the safer? Just park your money and
those triple nets are probably some of the safest investments, right? I mean, you've got these long-term credit tenant, right? You need like a good tenant in there.
Get Chick-fil-A in there, get Starbucks in there.
I mean, that have been around for multiple decades and probably in the foreseeable future, not having any issues. So it's probably one of the safest ones. And the cap rate speaks for that, right? You can go, you're buying those at a 3.5, 4 cap or something. I do think that retail is complicated. It is more complicated than most other sectors.
Yeah.
The way the lease structure is, the length of the leases, the triple net that we mentioned where, those are billed back to the tenants, different than in multifamily. So there's a complexity to retail that also probably keeps people out of it.
The lease structure alone is different, which I wish more people understood. I think we should do a course on it or a class on it.
Yeah, it would be interesting. Let's bring somebody in. One of our broker friends and talk about triple net leases, negotiating. I mean, that is a deep topic.
It is a deep topic. And I know
these are 90 page documents. I mean, these are not to be taken lightly.
And typically when the experience people have with leases, that they've leased an apartment or, I mean, they rented an apartment, they rented a house at one point. So they're assuming it must be the same. But when you're renting something to a business and all the operations of that business come out in the lease, of what they're allowed to do, what you're allowed to do, what your responsibilities are, their responsibilities, where the line is drawn between landlord and tenant and how they can operate because they're there to make money. And their success, as a landlord, if anybody does own property and they have business operating, whether it's retail or office, it behooves you to make sure they're successful. Absolutely. And make sure that center is immaculate, that place is immaculate, so they can perform the best. Yeah. And when their businesses are thriving, then other people want to be there. Yeah. So I've never
they feed off of each other.
They feed off each other.
And putting that perfect synergy together. Yeah. Right. The tenants that you'll know you'll get foot traffic from this guy, and they'll stop into this one. Yeah. And they'll end up staying over here. Like that melody to work together in retail is kind of an art. Like that's why it is a complicated sector. Yeah. In location, it's huge, right? It's not, office can be kind of off the beaten path. Multifamily can be off the beaten path. Retail is main and main. I mean, it's which side of the street are you on? This is something I've even learned in the last few years. You on the going home side or the going to work side? Oh, yeah. That determines what type of tenants you can put in there. Yeah. So these are just the complexity of retail, which keeps competition low, I guess. But
keeps competition, and where there's
complicated,
where there's complexity and there's opportunity, because if it's so simple on the surface, then everybody jumps into it. It gets saturated, and it kind of kills it. If there's a little bit of mystery to it, a little bit of complexity to it, then it allows for opportunity to someone who just wants to take the time and understand a few of these nuances. And if something is nuanced like that, you can go make some money. Yeah, you can step in it too, for sure. Absolutely. But you can make a little bit of money. Yeah. So
construction's complicated. City approval. City will get behind you though, right? Housing is extremely hard to get entitled, get through the city process planning. Or retail, I mean, it is business. There's tax revenue off of that. You're opening up you're providing jobs.
Hospitality too.
Hospitality is a huge one, Almost kind of like synergistic to retail on some level, But.
I don't know the details of this, but I'd be curious to have someone else on the show eventually about ADUs, because I know ADUs are a huge thing in the real estate world right now. People can increase the value of their homes, but is it because they can rent those out or lease those out to something else? It almost helps the housing crisis. Stuff like that. So I'm just curious about that. I didn't know if the revenue was taxable or this. I have no idea about that world, but I'm fascinated by it because I think it's a new, again, a real estate product that's trending right now is ADUs, retail. There's always flex space, industrial flex space right now is doing well. There's self-storage is certain areas. California is pretty hard to do, but a lot of places around the country. I just, it's fascinating which ones are hot at the moment.
Yeah. So Kyle, sum this up for me then. What pros of retail property versus multifamily?
So it's a good question, but to sum it up, everything has a cycle. And if I give any advice to anybody that would want to listen, is catch things on the early part of the cycle. Go through it. The trend is your friend for a little bit. Do it, whatever. Just because everybody else is doing it doesn't mean it's bad. It's if they've been doing it for a long time and you get in on the tail end. Mm-hmm. That's when you're in trouble. Mm-hmm. That's when they have that old saying, the taxi driver starts telling you about a great investment opportunity. It might be time to pull out, right? This is the very beginning. So retail still has high cap rates. So the property's cash flow from day one. There's tons of opportunity. Most of the retail boom was 30, 40 years ago. You can buy existing product that cash flows. You can renovate it, put in new tenants. There is a huge, massive boom of different retail and restaurants, a business around the country. How many new restaurants are starting? How many new retail? How many new fitness things? It's all over the place. And the vacancy rate, at least on the West Coast where we are, is less than 2% in most areas. There's nothing available. So it's the beginning of where it peaks. It's still over here. It hasn't got to the top yet. Mm-hmm. So that's what it is. The other ones are great asset classes. If you owned them and you got in early, great. But it's past the peak and it's doing this where they're so hard to acquire because the cap rates are compressed. Office space just has no demand. A lot of asset classes just aren't in that same part of the cycle as retail. And that's why I'm so gung-ho about it. And along with a couple other asset classes, possibly some self-storage, flex space, ADUs, for residential, things like that. Residential I put as one of those, one of the hot ones.
I like it. Office space, more small office space, flex space, smaller suites inside a high rise are on the uptick. Actually, they're seeing a higher demand. These are 5, 10, 15,000 square foot spaces, not the 100,000.
Okay. And
they think, we don't have all that data yet, but they're attributing it to people losing their job and starting that new company. Maybe they got a little bit of funding there. A lot of tech jobs have lost, they've been lost, or laid off over the last couple of years, and people are starting to get their feet wet and trying to start that new company.
Yeah.
And they need that 10,000 square foot space to house the startup. So kind of cool to see. I mean, things are changing. It'll be interesting to see how this thing all plays out. But
for sure. And if you're starting a business right now, you get some smoking deals on some rent for some office. Yeah. So it's nice. Yeah, if you're going to start a business, hey, it's not that bad to go move into somewhere that used to be $4 a square foot. Now it's $1. So retail versus multifamily is always a topic that we always get asked about. I feel like they're competitive in a way. Multifamily guys, brokers, investment, that type of thing. But we have some questions. So our next portion here, we'll roll right into a little segment from questions from our probably very new audience. A lot of this comes from social media and our email blasting a little bit. But we asked some questions about if we had anything to answer on the podcast, the next episode, what could they be? And Taylor compiled like 10 questions.
Oh, nice. Okay.
From other individuals. I've never seen them either. I have no idea what they are.
Okay.
But we can probably go back and forth. You ask one, answer one, and so forth. But here we go. So let's bring in Taylor.
What are your tips for handling change within a company? When a new advancement or trend is present, how do you not become overwhelmed with keeping up?
Hire Gen Zers. They seem to know what the trends are, and we can stay ahead of them.
That's a good answer. I like that answer. I like that answer.
Keep the staff young.
Yeah.
Trends.
How old are you, Taylor, by the way?
21.
21. Just turned 21. So we're already keeping up with
Yeah, I got a whole thing on Gen Zers. My mind has been changed. So
Yeah.
whole thing
I
on.
think they got a bad rap at first.
We've been reading about it for
Because
a
it's
long
like
time.
they're
I was telling you that.
overly sensitive and this and that. But working with them, I've been.
It's like
surprised.
every new generation coming, I can see, like, because I'm a millennial, and I remember the old guys being like, "Oh man, the millennials are coming,
Yeah.
and they're coming with force, and what are we gonna do? They've been babied all the time."
Yeah.
And now we're like well into the workforce, but
No.
it's been the same. We've been hearing about Gen Z's coming, and they want to do this, and they want to do that. But
Dude, every generation is like they think about it's like the one after them is like back in my day we had to walk uphill in the snow both ways, fucking like what? It's bullshit.
Yeah.
So Hi, Aria.
Okay. I have a second part to this question.
Sure you do.
Is it a threat to your company if you don't adapt to trends quickly, or does it set your company apart and seem different from the rest?
I think it depends on the company because it depends what your product or what your service is, how old school it is. I wouldn't go to a lawyer's office and say, "Are you guys keeping up with the trends?" Because that's it. But however, they're still on Zoom calls now instead of in person. When we first had to meet lawyers 15 years ago, it's all in person. And now it is. So there is still a little bit of keeping up with the trends, keeping up with the world, maybe. Like that's just some basic stuff.
Yeah.
But I wouldn't say my doctor or my attorney or things like that need to be trendy right now. A lot of the people that we work with have big real estate portfolios. They might be a little trendy on the aesthetic of their assets or their properties and things like that. But they've been doing it for 30 years. I don't know if they need to jump on any bandwagons right now.
yeah.
Yeah.
It depends on the trend too. Are we talking, there's trends of like means and method of doing something. There's trends of just, this is the trend of the week. I'm reading this book that Never Split the Difference right now. And he talks about a little bit about this too, that they have like this old school mentality that was in a textbook and they adopted this negotiating strategy for dangerous people, kidnappers and, hostage situations, but that they that was just like the way that everyone did this, law enforcement. But now they've kind of discovered a new way to do this. And so keeping up on those, different, but it's kind of the same, where they took real field knowledge, like this is what's actually working for us, and keeping it in, making that like a new trend and trying to train people on these old habits. So
Right.
I don't know. I mean, you got to stay up to date for sure, but
Yeah.
Don't be a dinosaur. There's no.
Yeah.
That's
Nobody likes a dinosaur.
No way. Nah. So.
They're extinct. We don't do that anymore. Okay. Next question.
Okay.
What would you say is the most difficult part of your job on a day-to-day basis, and how do you overcome it?
I mean, I'll say the amount of hats that I have to wear as a business owner, whether you got partners or not, the amount of things that I have to shift, right? I mean, I need to know a little bit about a lot of things. I don't need to be the expert at everything, but I need to be able to shift that and talk to all of those different personalities. That's difficult.
I think making decisions that affect people's lives sometimes is more difficult than it can seem on the outside, because everything sometimes you do affects people's careers, their paycheck, how they feed their families, things like that.
Right.
If you have tenants that are in in one of your buildings and there could be something that's wrong. Example, we have a tenant that is a very unpopular type of tenant at one of our newer properties. And everybody, the lender, the whole team, our limited partners, everybody wants them out of there because their business is not very attractive. However, talking to them as an individual, they're a small business owner with a family, and telling them that they can no longer lease a space there puts them out of business. They can no longer feed their families, put food on the table, things like that. So it comes all the way down from staff members to tenants to everybody, but every decision has consequences, and having to weigh those out is something that we don't take lightly, but it's like a very tough decision about any business owner, is knowing that what you do affects multiple people.
How do you teeter that line then?
It's just trying to do the best you can, I feel like. I think that you have to use a lot of common sense. Experience helps. I made horrible decisions a lot of times years ago, like 10 years ago, that I wish I would have taken back, that I wasn't really thinking about, maybe being selfish or inexperienced or things. And now I try to look at the bigger picture of not just myself, but the organization as a whole, what we're trying to accomplish, and each individual. I really try to put myself in these people's shoes about what is their perspective, and then try to make the best decision for everybody. And that comes from a project or anything like that, a big construction development project, or get on a call and there's an issue and it's like, hey, Kyle, what do we do here? And I have to sit there and try to think of like, what is the best solution and think steps ahead of what the outcome is going to be.
This next one is kind of related to what you started talking about towards the end, of like that projects can have really heavy impacts on people. But are you aware of some of the opposing feelings that communities can oftentimes have against redevelopment and renewal? And to answer after, what about West Hive Capital's process and ideology addresses this?
Yeah, we have a core value based around this at some level, but my opinion is that everybody will fight change. And so there's always going to be community backlash, even though we are trying to do something to better the community. Whether that's for future generations, their needs and meeting new demand and, providing new jobs, people will always fight that because of what it used to be. Or, I used to do, I used to hang out at that place all the time. I don't want it to change. That's how we've always remembered it. So people will always fight back on that. I think, how do we handle this is, we're trying to look for, we look at that as almost fighting change like that is selfish. And we look at that as into future generations, like we want to create opportunities for them. The newer generations to have places to work and remember and, work at these type of restaurants and things. So
I think Brandon said it well, exactly to his point, that trying to look at the reason someone would oppose it is, say it's a retail center that we're redeveloping and they don't want it to be redeveloped for some reason because they have these memories there. Well, thinking about that is like, okay, this guy, this person, this individual doesn't want us to change it because 20 years ago, he's very nostalgic about what it used to be. And this restaurant, this place, something like that. He's got a lot of memories there. Right. However, he got to enjoy that place back when it was in its heyday, when it was vibrant and it was thriving. And that's the memories that he has. But then 20, 30 years later or more, 40 years later, it's no longer that same condition that it was. So now younger generations are coming here and they're not experiencing this wonderful experience this individual had, and them not wanting to change it and update it and make it better for everyone. I do feel, to Brand's point, is selfish in a lot of ways. And I think that things need to be updated and improved as life goes on. And that's just how it is. So I do see that there's pushback with what we do. Fortunately, we're not building these giant monstrosities from the ground up and have the whole city showing up with pitchforks. I did speak on behalf of another developer that I know at San Juan Capistrano recently. They're doing a housing project down there, and it was like one of those. It was the whole torches and pitchforks coming out. They had one of the residents got their son to go speak up at the microphone and had a speech for him about how they didn't want this development to go through because it would increase traffic and his friends might get hit by cars, and they had him cry up there on stage. I was like, this is brutal. Like, these people literally were like, I hated this development so much. Yeah. That's what they were doing. We don't typically do stuff like that. It's we do deals that we're taking that old, ugly, tired strip center and making it pretty again. So we don't get a lot of that pushback. But we do take consideration the entire community before we do anything and want to work with what is best for them.
What is one thing you wish you could tell yourself 5 years ago that you know now? And do you think anything would have changed if you did know?
So that's a really good question. And this one kind of just bugs me in the back of my head sometimes for like a lot of years. But don't get emotionally attached to some things in business just because you think it should work. Listen to the basic economics. What I mean by that is you might have a shitty idea That's just a fact. Like, you might have a shitty idea, you might have a shitty product, you might have a shitty service. It just might not be good. And thinking of that, it's a difficult thing to understand. You see all these things, especially on the internet nowadays and social media and all this stuff about keep pushing, keep grinding, you're 1 minute away. How do you know if it's just bad? Like, you're selling something nobody wants. That's the thing. So I think understanding that sometimes if you really are talking to customers and you're trying to sell and they're just this look in their eyes like they don't get it at all, you may need to pivot and let it go. And there's a sunken cost fallacy that I have been guilty of myself, where you put so much money into something, it's like you can't back out now. I've already invested $100,000. No, you don't put good money after bad. And I've done that too many times. Put good money after bad. And if its idea is this bad one, you gotta like let it go. And once you have a great idea that people want, you can feel it.
Yeah,
you can feel it instantly. You're like, oh, there's like an energy, there's a vibe. It's not hard to hire employees. It's not hard to get lending. It's not hard to do that. If you have a good project development, it's not even hard to raise money. Right. If you have something that's going to benefit everybody, you can feel it. If it's not, it's a struggle, and he's like, no one really believes it, then you might need to switch to something else.
For me, 5 years ago, maybe thinking bigger. Just more of a personal thing, but why was I feeling like I wasn't ready to do something or take that leap? I've been the business owner, but maybe jumping into something different, going bigger.
Yeah,
and I'm kind of like telling myself that daily, like, why not swing for the fences? What do you have to lose? You can lose everything, but the chances of that.
Yeah,
that's a pretty good one, man. Like, yeah.
Do you think anything would have changed if you knew that?
I probably would be doing what I want to be doing sooner. I would have been doing what we're doing now, probably maybe a few years ago.
Yeah.
But we were just, we're not ready, or we don't have this, it was just, you're just analysis paralysis, or, I have that saying like perfection is the enemy of profit. Well, it's got to be lined up perfectly. We got to get it all situated. Sometimes you just got to just start going.
Build that plan on the way down.
And that's small regrets.
Shit. Now that I think about that one for a while, man. That's thinking bigger.
At least you know now.
At least you know now. Yeah.
Better late than never, I guess. What part of the process is your we did it moment? Is it closing the deal, finishing the project, opening day, a random Tuesday that you see it, and why?
Closing.
Yeah, closing. There is this magical thing, different than our other businesses, where we were project based for other people, and so it was like we would get the sale, be like, yeah, I'm like, oh, we gotta like really get to work now, like,
the job.
Like, we actually like, this is like when the real job starts. I feel like this development one is a lot more fun. Every time we close a deal, there's like a celebration. The team's all excited, investors are excited, lenders are excited. There's still work to be done, but it's just a different feeling.
Yeah, everybody says congratulations. Everybody does this. People are smoking cigars. There's closing dinners. It's like a big accomplishment. And you've laid out the plan, which if executed, it should start and then finish the project. And it's just like a better thing. Back in the day when we first started, I'll tell you a story. This is like, I was trying to sell energy efficiency insulation in people's houses, and I was knocking on doors. Knocked on this door and gave the guy my spiel, go in there, sit in his living room, tell him all about how we can help his house, his energy bills, and all the stuff. We're going to do stuff to his house. And I sell him. And I sell him. It was like $3,500, I remember. I was like, whoo. And he's like, yeah, we can install tomorrow and do everything. It's great. And he's like, yeah, I'll have some guys out here. And next morning show up, and I knock on the door again. And he's like, you installed too? I'm like, yeah. And I just like, I was not only selling it, but then I had to go do the work all damn day. And it was just like, I was excited for a second. And then I had to just go, it was just like not the same.
Yeah.
A little anticlimactic when you show up and you're the one doing all the work yourself as well.
Brandon, you kind of touched on this when you said that the most difficult part of your job is having to wear many hats and be multifaceted and everything. But does work ever really stop when you have your own company? And how personally do you ensure a balance between work and home life that isn't toxic or imbalanced, if possible?
Well, that's deep. Does it ever stop? I don't think so. I don't even think if you had a day job that you're really passionate about, I don't think it stops either. You know, I mean, I don't envy those people, but some people have that 9 to 5 where they can just shut it off. I mean, we can shut it off on some level. We tried it where we're getting further in our career here where we can kind of take a day off and reset. Like, you need that. Got some personal time. You know, I've just, I'm like a routine type of person. So as long as I get some of my me time, but you know, working out or whatever that is, go hiking, spend time with the family, something like that kind of gets you a little bit of an escape. But does it ever stop? No, I mean, Kyle touched on this too, where we're like, some of the decisions that we have to make, these weigh on us. I mean, they keep us up at night. You know, we're affecting people's lives or our employees or whoever this is, the community. So, I mean, I'm constantly thinking about this. How do I better myself? How do I better the company? How do I become a better leader? It's a curse, but, you know, that's what keeps us kind of driven and moving forward. So it never does stop, unfortunately.
I think balance is bullshit. I don't like it. I balance in big chunks. I don't balance every day. I don't like it. I'm not good at it. I can't really understand it, but I know you have to do what's best for yourself, right? So I do like this thing that almost like a cheetah. Like, I go really hard and very motivated for days and days at a time, working for like these big stretches, and I can just keep going and going, and it's like the momentum carries me. And then after so long, I'll almost like tire out. I need like a reset for like a day or two. Maybe I'd go away for something. Maybe it's like I just kind of take a day off, shut down my phone, go relax on the beach, go a weekend getaway or something, and then I'll come back. But I like these explosions, almost like sprints. In project management, there's a term like a sprint. That's how I function. So I like these big sprints. A lot of my friends are more balanced every day. It's all different. I still have a routine. I still have everything I'm doing, but I like these explosions of like productivity. And then I kind of like take my foot off the gas for a little bit, regenerate, and then I go. And that's how I feel good. But everything, when it comes to balance of like, say, family, friends, work, that type of balance, that type of thing, it's all intertwined to me. Like, that's part of like being a business owner. It's all the same. And I'm lucky enough to surround myself with people that don't mind if I talking about that at dinner or do this or taking a call. It's all intertwined together. It's just my life. I'm living as one. I don't think about it about compartmentalizing or separating.
I mean, that's it. We just eat, sleep, and breathe it, and we surround ourselves with people that enjoy it too. And
you know what's interesting? If someone's like a professional athlete and they eat, sleep, and breathe baseball or football, no one ever questions it at all, right? Because they think like, well, that guy's just doing it's like really fun or something. Playing a game. That shit's hard work, man. Like, those guys are from the morning till night. Everything they do is around that. That's it. No one ever looked at like Tom Brady and was just like, this guy's just working too much.
Yeah, poor guy.
Poor guy. No one ever says that. But like, when it comes to business, somehow it equates to the 9 to 5 job you have when you're like scooping ice cream or flipping birds. It's a pain in the ass. And they're like, well, that's kind of the same. It's like, it's not. It's not. There's different levels. And I hated waiting tables too. It sucked. I hated selling shoes really sucked. I didn't like that either. Those are different types of things where you do need a balance. Shut it off. Go have some fun.
Okay, the last one is still pretty heavy, but I think it's good. And I think you guys probably have a lot to say about it. Is work ethic nature or nurtured? Meaning, do you believe that one person with a certain background is inherently bound to have more of a high work ethic than another person with a different background?
I think that's a lot to do with how you're brought up. Unfortunately, which is unfortunate for individuals because they always can't choose how they're brought up. But I feel like it has to do with a lot how you're brought up. If you're instilled like work ethic and in sports or school or something early on, it tends to carry over. If you are instilled those things, or maybe just the opposite, just given a lot of things or something, you don't really have that. Different things drive different people though. You don't know what everybody's motivation is. That could be what you're born with, like just your motivation in life. But I think it's a lot of nurture versus nature type of thing. Like nurture is,
Yeah, no, I feel like, unfortunately, there's some of the cards that you were dealt. obviously, but I think there's like this passion thing too. Like you got to find something you like to do, right? I mean, you got to find something that you're like motivated to go do every day. And if you don't have that, then go find that. Because otherwise you may not be motivated. Like you don't, I like getting up in the morning. Like I don't want to go to this night, but then go find something that you do like. I'm trying to make a living doing it, but there needs to be some underlying, like it's, I don't know. I mean, it's just like there's something to do with that motivational factor. Like you've got to kind of enjoy life a little bit or enjoy that journey. And there's been times throughout mine that I didn't enjoy it. I'm like, this sucks. I think this is all right for multiple years on end, even like, does this ever get better?
Right.
But you kind of like got to find some underlying passion or pivot and start doing something different or a different role in the company that you do enjoy. And that takes a long time to maybe find that passion. But I think you can kind of overcome the way that you were brought up. It's just, you got to dig deep and it's going to be painful. And some people are landed here and others way far behind. But you can kind of just use that as an excuse and tell yourself that all day, or you can just push through it and find something you enjoy and go for it.
I know people that are broke and don't care at all, don't do shit. I know people that are rich, don't care, don't do shit. I know people that are broke and have tons of motivation and want to go get it. I know people that were born with tons of money and they're still getting after it.
Yeah.
I do not know what it is in the individual, but to me, it just seems like there has to have something when they were raised about you're supposed to be working and moving forward, or they're not. And that's it. I do know that purpose and passion, or just a purpose in life, does help with mental health and things like that. If there's nothing you have going for you or no goals, then it just gets depressing. There's nothing like what does everything mean? That you get into all that type of stuff. But I don't really have an answer for that question.
It's a tough one, yeah.
Because
I've seen all walks of it.
I'd like to see a chart, because it's got to be just a whole like all over the place.
Yeah.
That I really don't know. But to go all the way back to your very first point, it's got to be something with that upbringing a little bit. It just, that's what keeps getting in my head. It's like, that has to be something about that.
So on that note, how do you raise a child?
Get
them to that, even if you don't have all the means or just load it up and just give them everything they need. But how do you instill that motivation into them? Like that is a code I would love to crack as I move into that stage of my life here soon.
Check this out. We'll do a whole episode about this, but there's a little preface, a sneak peek in it. I was watching something. It was like a documentary or something on Netflix or something like that. And it was a guy who was a scientist, in psychology. And he wanted to do an experiment. So he had 3 daughters. Okay. Yeah, I think I told you this. And he's like, no, I bet you it's how like they're raised from the very beginning of their babies will impact whatever it is. So he knew nothing about like chess, right? But he's like, as soon as they're born, put a chess set in front of them, and he had this entire philosophy he was going to do where he was going to praise the work, not necessarily the results, but praise the work of chess. Like, I can't believe how good you are at chess. You did so good. I love how you're working at it. And all 3 daughters became chess grandmasters. And he never even knew how to play before. And it was just an experience.
Let's bring this guy.
Yeah. I think he's still alive. Get him on the show. But he was proven that if you can structure when a child's born into some sort of thing where it wasn't like, he was talking about even like Mozart, wasn't some prodigy at 3. His dad was on his ass at 3, being like, play that piano. And that's what happened.
He was giving him that praise. Like, yeah, great, buddy.
Yeah. Okay. Exactly. And it's not, it's like kids that have parents who are professional athletes are like, could be like King Griffey Jr.
So that brings the point of, is it in your upbringing? Definitely
is something there.
Yeah, definitely something there.
Yeah.
You can overcome that. It's just going to be a little more difficult, it looks like. So,
well, on that note, that was awesome. We'll wrap up.
Topics today.
That was some good stuff. We'll wrap it up. But thank you, everybody, for joining this episode of Inside the Hive with Kyle and Brandon. Comment and subscribe, please. And get 5 stars so we can actually get this thing moved up in the rankings and grow that audience and share this stuff with more people. But thanks a lot, and see you next time.